Ever seen the crypto market fake you out? Just before the real move begins? To play wisely, professional traders quietly rely on kangaroo tails. Once you understand how kangaroo tails work, you'll never look at price charts the same way again. As a naked trader, you're using price patterns that are clues. Hints about where the market may be headed as naked trader does not rely on indicators, which are mostly lagging. The kangaroo tail is a reversal signal. So when we see a long wick near support or resistance zones, we know that the market has moved too far. The kangaroo tail is a clue that the market has extended beyond a zone, perhaps a bit too far beyond the zone. Longer kangaroo. Tails have a tiny body and a long tail. Most kangaroo tails are longer candles. This means that the kangaroo tail will be a bit longer than the surrounding candlesticks. The best. Kangaroo tails will have very long tails and very short bodies. The open and the close of the kangaroo tail should be near the extreme end of the candlestick. A long tail suggests that the market has gone a bit too far when testing a zone, whereas a short tail may suggest that the market simply brushed up against a zone. Remember, as a naked trader, you want to look for trade opportunities on zones. Zones, as you recall, are those spots on the chart where the market repeatedly reverses. A kangaroo tail is a valuable clue when it occurs on a zone. The kangaroo tail with a very long tail suggests the market has become extremely excited before reversing sharply. So, a kangaroo tail on a zone is a high probability reversal candle at a spot on the chart where the market has historically reversed time and time again. Kangaroo tails often penetrate a zone before closing on the other side of the zone. The big bullish candlesticks prior to the kangaroo tail hint that the market may have further upside momentum. Thus, this is not an ideal kangaroo tail simply because the market is printing giant bullish candlesticks. Immediately prior to the kangaroo tail, many failed kangaroo tails follow large candlesticks. The best kangaroo tails have a very large range, often greater than the candlesticks immediately prior to the kangaroo tail. Naked traders book profits using the same kangaroo tail candlesticks. One simple way of managing the kangaroo tail trade is to take profit at the very next zone. There are several optimizers associated with the kangaroo tail trade. If you have the patience to wait for only the very best kangaroo tails, watch for the following characteristics. Kangaroo tails with very long tails. Kangaroo tails with much room to the left. The ideal kangaroo tails. Print at an area on the chart that has not seen price action in a long time. Bullish kangaroo tails with a closing price that is higher than the opening price. Bearish kangaroo tails with a closing price that is lower than the opening price. The candlestick after the bullish kangaroo tail trades higher than the high of the kangaroo tail. The candlestick after the bearish kangaroo tail trades lower than the low of the kangaroo tail. Kangaroo tails with a greater range than the previous 10 candlesticks. There are also several red flags, so watch out for these. Kangaroo tails with very short tails. Kangaroo tails that do not print on a zone. These are not valid kangaroo tails. Kangaroo tails preceded by giant candlesticks. This suggests that the trend may continue and the kangaroo tail may only be a pause. While Doji, kangaroo tails, and Dragonfly Doji all appear similar as reversal indicators in price action trading, they each have distinct characteristics, meanings, and uses. A Doji candlestick with an open and closed price that are nearly the same. It looks like a cross or plus sign. It shows market indecision. Bulls and bears cancel each other out. A kangaroo price action pattern with a long tail, wick, and a small body near one end of the candle, often with minimal traffic to the left. Bullish kangaroo tail, long lower wick, small body near top, suggests rejection of lower prices. Bearish kangaroo tail, long upper wick, small body near bottom, suggests rejection of higher prices. Key requirements: clear support/resistance zone. Wick is at least 2x the body. Little or no price congestion to the left of the tail. It's a reversal pattern. Traded with a trend, reversal once the tail confirms rejection. Dragonfly Doji and Gravestoe Doji are special types of Doji where the open, high, and close are at or near the same price, with a long lower or upper wick. If this helped you level up your trades, like, and subscribe.